If you can prove that you've been in the United States for 6 months over 3 years, the substantial presence test, no FIRPTA withholding. That
No matter the
said,
sales price.
no matter the sales price.
All right, today'srealtalk.com, 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 FIRPTA. Now, that term might sound funny, but it's not a joke in any way, shape, or form. If you are buying or selling real estate, it is an important concept to know, and we're going to find out why today. I've got Mr. Richard Kahn all the way from sunny Florida with us here on Today's Real Talk, and he is here to educate us on FIRPTA. Mr. Kahn, how are you, sir?
I'm very well, Justin. Thank you very much for having me on your show.
No problem whatsoever. You are, am I allowed to call you an expert, Richard? Is that okay?
I am a testifying expert and I've qualified and deserve that title. Thanks.
Well, you can testify today, sir, on Today's Real Talk, because what we want to know about FIRPTA. We want to know the history. We want to know when it applies, when it doesn't apply, and the things we need to look out for. But I keep saying the word, but Richard, what is FIRPTA?
Well, FIRPTA are the initials of the law of the Congressional Act, the Foreign Investment in Real Property Tax Act, FIRPTA. It was created by Congress in 1980 briefly to address the fact that foreigners were selling properties in the United States that they owned, and in most cases not paying taxes, not paying capital gains, and not declaring the sales. So in 1980, the Congress passed the act, but it moved around and didn't have teeth until 1984 when the Debt Reduction Act was passed, and then it became mandatory, 10%. And in 2015, the PATH Act, enacted by Obama, changed that to 10 and 15% and made some additional changes, like appointed certain people like myself who qualify as certified authentication agents by the IRS, so that foreigners didn't have to send in their original passports in order to apply for a refund.
A lot to delve into there. So let's start back with the 1980s. When you say that this wasn't mandatory, I guess who then was actually doing it? Who was following the withholding process if it's not mandatory, from what you recall from the 80s?
Well, the closing agents were the ones that were really initially sought after to facilitate that, but it's always been the buyers. So the law requires a buyer in a situation of purchasing real estate from a foreign national to withhold, and they must, by regulation, withhold. And if you're using any type of title agency that is large, and most of them are, and any attorney, they're going to know about that usually, but in many cases they don't. And so there's a lot of instances where buyers don't know the law, don't withhold, and then the IRS comes after them with the standard penalty. The standard penalty, if you do not withhold or withhold improperly, is 5% per month for a maximum of 5 months, plus interest and penalties. And they can add fraud and some other penalties around. So if you have $100,000 withholding, say 10% of $1 million would be $100,000 withholding, and you don't withhold as a buyer, you're going to get $100,000 withholding amount plus 25% penalty. So right off the bat, you owe the IRS $125,000 in that case.
As the buyer. And
The
then that's who
buyer.
the penalty is with the buyer, because I guess common sense wise that makes sense, because a seller who's foreign and who is going to pay a tax, you can't really rely on them to notify and withhold those funds themselves, so the duty becomes on the buyer. Is that the logical reasoning behind that?
Well, that's the prevalent reasoning behind anyone. Let's say you own stocks or bonds or bank or income or W-2s, 1099s. Anytime you're involved with a foreign national, so that's somebody that is not a U.S. citizen, does not have a green card, doesn't meet the substantial presence test of being in the United States for a certain period of time over the last recently, then the party paying them is the one who's responsible to withhold. And that creates a situation where the seller or the recipient of the money has to deal with the IRS. The IRS wants their uh, taxes.
Right. And when we get to 1984, you said it was under Reagan that the Debt Reduction Act came to be. Is that correct? If I'm thinking
As
it,
I recall, it was Reagan, my ex-boss, Don Reagan, CEO of Merrill Lynch, and Reagan. They used to call him Reagan and Reagan. And uh, uh, Don Reagan, he was very interested in that. He was also very interested in separating the commercial banks and the investment banks, which after his death they did, and it instituted another a problem, which was the mortgage-backed securities that failed and the subsequent crash of financial markets and things like that in uh, 2007, 2008.
so when the Debt Reduction Act came to be, what was the purpose of that? The name of that act, right, leads me to believe that the federal government was trying to find ways to lower the deficit and get rid of debt. So they chose the route of enforcing a tax on those who are not legal residents of the United States, because there was no other way to track taxable income. Was that the logic behind that as well?
Well, the Debt Reduction Act was an act that was very comprehensive, but in the aspect of FIRPTA, a lot of people were selling properties and avoiding paying their capital gains, which is long-term, if you hold it for a year or more, and or short-term capital gains. So they were uh, making money and not paying taxes.
Why do you think? What was the thought process behind 10% originally, and then fast forward to, you mentioned Obama's time of 10 or 15?
2015,
Yeah,
FACT,
2015. Why
EATA.
10 and 15%? Was there reasoning behind that? Or was that just the magic number they pulled out of a hat?
Well, initially they felt that a 10% withholding would be more than sufficient to pay any outstanding taxes that might be due, DUE, due and owing in the transaction. Later on, because of profits and more earnings, they felt that 15% would be more in line with a withholding sufficient enough to cover what was owed to the IRS at the time of sale. FERPTA's deducted at the closing.
Mm-hmm.
So when they disperse the proceeds, that's when they disperse FERPTA, and you have a couple of choices. You're not asking that question, but you have a couple of choices on that disbursement. You can either disperse at the closing, meaning remit to the IRS that amount within 20 days of the closing without suffering penalties. Or if you qualify and the transaction qualifies, you can apply to the IRS for withholding certificate. In other words, present your financial tax case specifically to the transaction to the IRS in writing and have them respond within 90 days or so, not including COVID delays recently, but
Sure.
and designate how much to release to the seller, if any, and how much to remit to the IRS, if any. And then you have 20 days from the date of that response letter to remit whatever it is, if anything, to the IRS.
So you're talking about the process now. So I am also a real estate closing attorney here in North Carolina, and we have worked together on a business. Full disclosure for the listeners, we have worked together on a business to business level. And so what you're talking about is I'm the closing attorney. I get to the point of preparing the final closing disclosure, or HUD 1, and when you say 10% or 15%, we're talking gross sales price. We're not talking about net proceeds. We are talking about based on the gross sales price. So I can either just send the number in, that amount, into the IRS with the particular corresponding forms, and I don't know those form numbers off the top of my head. I apologize about that. Or someone like you can step in and get a withholding certificate, if I'm understanding this correctly, and we would hold the funds for up to approximately 90 days, let's say, because that's the general response time from the IRS, which then you would instruct us the amount to actually send in, which, am I safe to assume that a majority of the time that figure is less than the full percentage of withholding based on the standard amount?
The 90 days is stipulated by the IRS in terms of a respond by time, and the IRS would be the one that would respond in writing. They'll respond to the party based upon the information in the forms. So it would often be myself, because you want, and the settlement agent, and they will tell the buyer how much to release. There's a risk involved in the transaction when settlement agents and realtors get involved, because the party that is directly responsible for the withholding, technically speaking, is the buyer. But practically speaking, the buyer often delegates that responsibility to closing agents. Sometimes there's buyer and seller, or sometimes there's just one, who actually facilitate the transaction, because they're the ones who cut the check.
Right.
But the buyer is the one who's supposed to be filling out the forms. Are the 8288, which is a form that gives information about the buyer, the date of the transaction, the amount of the transaction, the withholding amount, whether it's 10% or 15%. If it's 10%, you have to attach an affidavit and some explanation as to why. The number of sellers that are involved in there, and the number of 8288A copy A's and B's, which are like little W-2 size documents that allow one's for the IRS, one's for the buyer to be kept in the folder, and one's for the seller that the IRS stamps and sends back, and that's proof that the IRS received that money. But it's problematic as well as facilitating the ease of the transaction, because if a seller does not have an ITIN or social security number, which is very often the case, then you have a buyer with a social security number or an FEIN, but you don't have a seller FEIN or social security or ITIN, which is an individual tax identification number. And so where's that money going? Well, it's going into the general coffers over there at the IRS. And what happens is, if you don't have somebody like myself or an experienced party getting involved in there at the withholding and remittance stage of the closing, very often the seller winds up really suffering, because they send the money. Very often the case is they send the money, but they don't really have enough identification of parties stipulated with that remittance to the IRS to fully, clearly, and easily identify the seller to the IRS. So the seller now, who's got, let's say, in $1 million transaction, it could be $100 or $150,000 withholding. You have them out that money during a time where they have to try and get that money identified to that seller. So it's really important for a seller to have proper representation, in my opinion, because it's very difficult to get your money if you're not being critically fully identified to the party who's holding your money.
I put the IRS in a similar category with another government aspect, and that's the DMV. And it's not the people who work there that are the problem. It's the systems that are in place. And so for some people, the amount of time that they would spend with, even like you're saying, no guarantee that everything will get sorted out, it's hard for me to see a reason why they wouldn't hire a professional such as yourself to help facilitate the situation. But, you know, in the times of selling a house, I've had multiple transactions where people didn't even know. Like foreign people who bought it didn't, you know, they say, oh, I wasn't told I was going to have to pay a tax when I sold. And I believe that, right? Like how many people are really asking that question? How many people, because on a buyer's side of a transaction, especially if it's cash, let's say, I'm not asking for their social security number. I'm not asking for their, you know, their resident status or anything like that in a transaction. Is it true that in the United States, anybody in the world can buy property here? I mean, is there anything to say you can't buy real estate in the United States?
To my knowledge, anybody can buy real estate in the United States, whether or not a bank is going to give them financing, or whether or not, you know,
Correct.
certain sellers may have certain quirks or this, that, and the other aside to the fact. But yes, you can come in and you can buy uh, real estate or real property. Real estate is just part of the FIRPTA. So FIRPTA is ECI, which is effectively connected income to real estate, and it's FDAP. It's a fixed, disposable, annualized type of income as well. So it's a very broad swath of the brush, but we're pretty much talking about real estate right now. But if you're a foreign national and you have investments in the United States, you know, you have stock accounts or this, that, or the other, or you own shares or companies, whatever, you are experiencing FERPTA as well. They're withholding that FERPTA and remitting it to the IRS as well.
When you calculate out what the number will be, right, for someone, do you in essence become, and I don't want to say their accountant, right, because I doubt you make full representation of all their accountings, but you look at, I'm going to guess, the price they purchased the home for, compare it to any potential gain on the property, how long they lived there, whether it was their primary for 2 years out of the past 5, is that relative to the analysis?
It is.
Okay, so then you report the numbers as if it was a legal resident of the United States. And is it that same tax amount that comes out for foreign people as normal legal residents of the United States, or is the calculation different?
You know, that's a great question. I am an accountant, and I am an automatic annual tax season filing program accountant, but I use CPA firms that does the accounting work. It's always a much better plan to do that. And so I mostly get into the area of being the tax advisory service. But FERPTA has several of the aspects of it which are complex. And the one, of course, that you're speaking about is the most important to the seller. So the most important to the buyer, which we had just been speaking about, was the obligation to timely withhold and remit. Then you have the interim uh, obligation and job, which is a very big job, of if the foreign seller does not have a social security number from having worked here before or traveled here or been a student before, and doesn't have an individual taxpayer identification number, then they have to apply for one. And you can't just apply for that ITIN without a reason. So you have to submit to the Internal Revenue Service the justification of obtaining that I-10. And of course, it's going to be the real estate closing. You're going to provide proof of that in evidence of documentary evidence as justification for the issuance. And then once they have a tax number, or if they did have a tax number, now the issue becomes, well, taxation and how much am I going to get as a refund? How much am I going to owe? What's the overall picture? And that's that's hitting the nail right on the head for sellers, knowledgeably so, as you raise that issue. The consideration in a investment scenario is that the foreigner starts off at about 30% taxation.
Wow.
And now, if you've been renting property, and very often that's the case, and very often the seller, which here's just happens to be today. These are tax returns. I don't know if you could see it, but it's a very thick package.
Yeah.
It represents transaction plus 6 years of reporting rental income that was received but not declared annually to the Internal Revenue Service by the foreigner. So if you've had income over the years, you're going to owe taxes on that income. If you have an investment property and you have not depreciated it, which is a little bit of a complex issue,
Yeah.
then the IRS stipulates that they will depreciate the property. How does depreciation affect the transaction? It's a little complex. I don't know if you want me to touch on that, but it can be measurable.
Is it the measurable over the is that 18 and a half years? Am I right on that number? What's the number in
Whatever
years?
the depreciation, length of depreciation is not really the issue. The issue, and it's a very good point, but they vary depending upon components and times and what
Right.
it is. These are all stipulated. But the issue of depreciation, which affects everybody that's a taxpayer, is that when you lawfully depreciate an item off your tax return, you take that item off the top of your taxes.
Right.
So if you depreciate $1,000, it comes $1,000 off your income.
Mm-hmm.
So if you had $100,000 income, your income is $99,000.
Mm-hmm.
When you sell that property and you do what's called recapture that depreciation, you're going to add in that $1,000 to your income on the year of sale. And the depreciation may not come with cash. It may be phantom income. It may be an addition to income, but without the cash to pay taxes. In any event, that's an aspect that gets taken into consideration. There are the actual tax calculations for a real estate transaction can be simple. I bought it that year, I sold it this year, I paid this amount of taxes, I paid this amount of deductible expenses, I paid real estate commissions and closing agent fees, and I bought it for $1 million, and I bought it for $800,000, I sold it for $1 million, I have a $200,000 capital gain. There are things that get added to the $800,000 basis, which may be taxes that I paid and some improvements to the property I can prove with cancel receipts, not just invoices, etc. So let's say I have a adjusted cost basis of $900,000, then I have $100,000 capital gain. If it's over 12 months, it's a long-term capital gain. If it's under 12 months, it's an ordinary income gain. And so if you're a rental investment situation, that tax could be $30,000 on that. If you're a residential, more, like a resident and a user, and I've been living there, and it could be $20,000.
See, it's interesting because people ask me all the time, because I'll go through with them, a 1099 exemption form, right? Where for someone selling a house. I'll do, just generally speaking, we take the practice of if it's under 500,000, we'll go through the form. Has it been your primary residence for 2 years of the past 5 years? Have you sold another primary residence in the past 2 years? On your tax returns, have you ever claimed a portion of the property for business purposes, at-home office deduction, something like that? The number 4 question on the exemption form gets me sometimes because it's about the gain difference, right, compared to what they bought it for and what they're selling for. Generally, I'll say, hey, the sales price is less than $500,000, so the likelihood of you gaining more than $500,000, I think, is slim to none there. I don't even know how that math would really work. And then, did you acquire the property by a 1031 exchange, right? So, walking through those type of questions, I end up getting the follow-up from the seller of, well, hey, am I going to actually end up paying any tax on this, right? I get that all the time. And I tell people, Richard, I'm very honest with them. I say, let me tell you, you don't want me giving you tax advice. That's not what I do. I will end up getting you in more trouble with the IRS than you would yourself, probably going through TurboTax or calling someone like Richard, obviously, to take care of it. So I guess it all depends, right? Like, at the end of the day, it just depends on all of the things that you've done with the house, how much you bought it for. There's no one set answer in this process. Am I getting that correct?
That is very correct. And the issue is really a very serious one because anybody, with 45 or so plus years, including 10 years working with the IRS as a consultant, and the one thing you don't want to do is lie or cheat or misrepresent or do anything with the IRS. You're going to have to owe a certain amount of tax, and you should be able to take all your maximum lawful deductions. The IRS wants you to do that. They want you to get everything that you deserve in terms of deductions and adjust your basis. But nowadays, when everything's computerized, one of the last things you want to do is be coming over from a foreign country, the Middle East, China, Asia, wherever, and be stopped in customs because you are delinquent or haven't paid or misrepresented, to the taxing authorities. As I just came back this weekend from visiting my daughter in Pennsylvania. She's an MD up there, and we went to the Eastern State Penitentiary, and uh, who was that tremendously notorious prisoner in the days of bootlegging and such that
Al Capone?
uh, Al Capone. He Who got him? The IRS. So,
Yeah.
you don't want to mess with the IRS. And the one thing that we don't do is mess with the IRS. And this is why I use a long time, very
Seasoned.
upstanding
Yeah.
and well-regarded tax professionals and CPAs and such to do the taxes. You pay a little bit more, but you don't want to be going to H&R. You don't want to be going to somebody who holds them out to be a tax pro uh, when in reality they're not. However, that said, for the foreign national, the process of actually getting to the refund filing can be a long and very difficult path. And then you have to take into consideration that everybody is supposed to file by e-file, right? Electronically
Hmm.
filing. So for last year's taxes, you would wait sometime in February of the next year, whenever they designate it and they open it, and you e-file, you electronically file your taxes. That's the way the IRS wants you to do it. But with foreign nationals in FIRPTA, if you obtain an ITIN, the year you obtain the ITIN, so let's say you sell the property in anytime during this year, you get your closing statements, you prove it, and then you're going to get your ITIN. If you get your ITIN in the year of whatever year you get your ITIN, you are not allowed to e-file in that year. You have to paper file. So paper file, anything paper file, let's say this past year or the year before, when the IRS was closed for 6 to 9 months and they're collecting I don't know, maybe thousands of bins of paperwork to be caught up on. Well, that's its own dilemma by definition, just as it is being paper filing. So you have the paper file scenario. We mentioned the withholding certificate, that's paper filing. So they have to respond and, there could be delays. But with your tax filings, if you're going to paper tax file, then you may be waiting 3 months or 4 months to be getting a response from the IRS with a refund, or in most cases, demands. If you don't use a professional, let's say like myself or others, and you might think that you have given the IRS enough information upon which they can assign an agent, and an agent could determine in hard evidence that's provable, let's say state, county tax records, or things like that. They may just now start to make inquiry to you for uh, uh, prove this, prove that, show me this, show me that, give me some proof. So then they mail that to you, and then you have to send it back. And you're looking at these 60-day round robins. They can add a lot of time, especially to a foreign national tax refund
I think
request.
you're bringing up a concept that is gonna give a lot of real estate brokers an opportunity, because I think the art of really analyzing and having a level of competency necessary to adequately represent a client in selling a home would include the wherewithal to ask, are you a legal resident of the United States? I don't think that that's a bad question to ask, because it's going to come up, right? Like if you close with a closing attorney on any on market transaction, if they're a halfway decent closing attorney or settlement shop, they're going to know to ask that question. So, and if they don't, you should find a new one to use, is what it's sounding like to me. And I would give that advice even before our conversation. But for a listing broker, before they take that listing, it seems prudent to ask that question, because in actuality they could end up as the hero for their client. What's the time frame that you would say reasonably for, let's say, someone about to sell a house? Is 90 days, is that enough? If I came to you 90 days in advance to the closing of my property, if I'm a non-legal resident of the United States and I've got to go through the FIRPTA process, is that enough time for me to contact you and get that process started to make either the withholding certificate possible in a reasonable amount of time? Or what's the best course of action and timing that I should give to have the best shot at this?
The topic you raised right now, Justin, is extremely beneficial to your real estate listeners, brokers, and principal brokers. Of course, I was a principal broker of real estate and lending for many, many years. Um, Extremely important. The fact of the matter is, and I've spoken on it in front of the real estate associations, is that FERPTA is a paragraph or addressed in the contract. So if you're properly filling out the contract, you are going to learn about FERPTA at that time. Unfortunately, many realtors are not trained properly to handle foreign national sellers. And therefore, you've got many situations where a seller, it's introduced to the withholding kind of like a surprise at the last minute. And I think that what's behind that is that a lot of the realtors, especially the less trained ones, maybe not brokers, but realtor associates, are afraid to throw a real wrench into the transaction. No, I'm not going to have 10 or 15% of the sale amount set aside and sent to the IRS. I have a mortgage. I'm going to be negative on the property. I'm not going to do it. Maybe there's some things I can do to uh, lie or cheat without calling that, and uh, uh, swear out that somebody's going to use it as a primary residence, for example. That's a whole group of a few different exceptions that may apply. You had mentioned that earlier. But in terms of timing, very often I am brought into the transaction late,
Yeah.
meaning within a week of the closing. And it's the seller, because they have a knowledgeable realtor, broker, or somebody or closing agent like yourself that's saying, hey, listen, don't let your seller get involved in this thing without getting some pro help. It's not expensive. You just have to have the real deal, so to speak, to uh, advise you. Because otherwise, this seller who gave you the listing for which you're making your money, and bad news travels a lot faster than good news, can really kill your reputation within their sphere of influence. Because when a realtor mishandles a seller's interests by not properly addressing the FIRPTA aspect, that that seller is never going to recommend that real estate agent or that real estate company at all going forward. And in many cases, they or the people that they know in their circles own a lot of real estate. I've made a business out of referrals. I don't advertise.
Yeah.
Decades. So a realtor who doesn't properly represent the seller in FERPTA, gets a little timid or doesn't know about or whatever, is really doing themselves a tremendous disservice. On the other hand, if you really do know about FERPTA and you have, like you do, the proper proven vendors to handle everything responsibly and make a rather difficult, complex process go smoothly, then that is a tremendous feather in your cap or tool in your toolbox for your realtors and your brokers, and especially for your title company.
Oh
A
yeah.
title company who's a pro title company is a diamond. Very, very, very important to have, like yours, like your title company, because the other ones, they botch it like you wouldn't believe. The withholding isn't done right. The buyer gets a levy against their property, right? So you buy a property and you're supposed to withhold $100,000. You don't. 3 months later, you get a levy for $125,000 and climbing with penalties and interest against your property. You can't sell it. You can, and then now the buyer goes to the settlement agent, and they want to sue them. They want, do you have errors and omissions? And it becomes a nightmare. It doesn't affect the ability of the seller, the foreign seller, to collect their refund. It just makes it much more difficult. I've got a case right here in front of me, where that exact thing happened. Buyer didn't do it properly. Title agent didn't do it properly. Uh, uh, Really messed up the documentation. I mean, it seems so simple just to fill out these forms and send it in, like a no-brainer. But yet, when they don't know how to do it, they can make errors. And even if it's just one little spelling error, the IRS kicks it back. Why? Because they've got your money. They have your 50, your 30, your 100. I've had it in the cases, they 600 million, right? In certain places, you sell a property, it could be $10 million. $10 million, you got $1.5 million FERPTA withholding.
Mm.
So they've got your money, and they're not going to make it easy for you to get it back.
No, because and I think a lot of brokers are going to think I'm crazy for going through this hypothetical scenario. So it's in the contract about FERPTA here in North Carolina. The standard realtor contract has the section.
All states.
Yeah. So for here in particular, a material fact in North Carolina is considered under law the ability of the party to complete the transaction. So a listing agent who did not do the proper due diligence of their own client's ability to sell the property, right? Because let's say they're underwater, if you include the FERPTA withholding, at that point, you're opening yourself up as a real estate broker in North Carolina to a commission complaint for potentially negligent misrepresentation and non-disclosure of a material fact. Maybe not intentional because you didn't have the competency, which is a whole nother issue, but to negligently not even ask the question, right? Or find out. So there's a plethora of issues there.
Well, absolutely. That's experience talking. Having been principal broker of real estate and principal broker of mortgage finance and lending, it's up to the principal broker to train their loan officers and their realtors to the letter of the law, and not just to avoid the complaints that go on with your local association or ethics wise, but in terms of errors and omissions, that also applies to attorneys, because a lot of states, New York and other states, that they require you to have separate representation on both sides. So the buyer has a separate set of representatives and the seller has a separate set of representatives. And so in cases like that, when you get up close abutting a real estate transaction, and this is like a ta-da event, um, that's not professional. It causes a lot of stress. It causes a lot of often bad feelings on a client that was very difficult to get. And FERPTA applies anytime a foreign national sells a real property, a piece of real estate. And that applies as if they're the seller, or that can also apply as if they're a spouse or a partner or a part owner, or they're just quit claiming. Quit claiming is transferring something, without really a sale. It's transferring it without a warranty deed, just over to yourself or to your wife or to your children or whatever. But any transfer of real estate from a foreign seller to any party for any reason is subject to FERPTA. I've got clients, certain real estate companies have divisional a representation, like the Asian American Real Estate Association, and people who have come across to ask me questions, and I've spoken before in the past. They just have a tremendous need in the United States to learn about FERPTA, because when it pops up at the end, it's a horrible nightmare. And the realtors and the people that know about FERPTA can not only win more clients, but they really need to educate themselves. And the principal brokers need to comply with education. And the FERPTA topic is not one that has a high population of attendees at the realtor associations, whether it's the NAR, a National Association of Realtors, or individual state and then county and multiple county associations. There's a tremendous need for the information, not just the information, but to be able to come back and ask the questions. I have a transaction that I'm doing. This is it today. This is it tomorrow. This is my deal. Because you wouldn't believe that within this small niche, there is almost an unlimited amount of scenarios. I have a piece of land. I sold my mineral right. It just goes from the beginning to the top. Pension funds, everybody's got different rules. Corporations, people are getting the wrong advice about LLCs or whatever. That's why I was approached to do a podcast. Me doing what you're doing will never, ever happen. Not while I'm alive, and presumably not when I'm dead. But a person with your availability and everything that you've got going on, and you wanted to add a little bit of something that nobody else has got. To my knowledge, I have never heard of anything like that. And it's not important until you realize it is important, which means anytime a foreign national person sells a property in the United States or its territories, this thing comes up.
So you keep using the term foreign national. So educate me on the lingo, right? Because I think that's where a lot of people get confused. And I used the term non-legal resident. Is that the proper term as well? Is that interchangeable, or help educate me so I can use the right terminology with people that come forward with this particular situation?
You know, I don't want to say, and I don't know if it's appropriate, but if you go to my website, I've got, and I have taken, and I've made it all myself using one of those, you know, website, and I have, you know, client frequently asked questions and areas on FIRPTA and services and whatever. And it's really very practical. It's a practical place where you could go to answer your questions. But so a client is not a, if you don't have a green card and you will have not spent at least 6 months of each year over the past 3 years, or at least 6 months over the past 3 years, the substantial presence test, and you're not a U.S. domestic corporation or a partnership, uh, and the real estate transaction has had to have taken place within 3 years, because if it has taken place after 3 years, well, the statute of limitation runs and the IRS keeps you withholding. You can't file for it back.
Ooh, ooh, ouch. So the terminology of saying, and you can give the website address, by the way. We'll plug it for sure. What's the website address?
Well, it's FIRPTA, FIRPTA, usually in all block capitals, and then refunds, plural, in small letters. And
So
so you may see me looking over to the right.
FIRPTarefunds.com.
I went to client facts, and, you know, what is a foreign seller? It's, you know, there's the topics on the website, you know, how do you get your money, the types of cases that are included in the topic. What is a non-resident alien? How about foreign corporations? What about pending real estate transactions? What about already closed transactions? You know, types of real estate that are included, geography and locales, and what happens when you have foreclosures and deed in lieu or short sales, and what happens if you have income from other than real estate, or you know, what about that depreciation recapture that can really knock you for a loop. What about visas and certified passports? I mean, there's just so many topics in FERPTA that come to play. And you think, oh, you know, it doesn't really matter. But when you consider that it's most often 15% of the total selling price, and you got every $1 million is 150,000 you take and send to the IRS. That's a lot of money. It's often a lot of, even if it's 30, 40,000, that's not loose pocket change.
No, it's definitely not, because real estate in general being the most high valued asset that most people ever own or sell in their life. So if you're thinking about somebody's nest egg, and even for a foreign national, that the fact that this is where their time and where their investment has gone, it is the largest asset for most people that they'll ever have in their life. So hypothetical with me here for a minute. So somebody with a green card in the United States, is there a situation where no FIRPTA? What about
no FERPTA withholding? If you can prove that you've been in the United States for 6 months over 3 years, the substantial presence test, no FERPTA withholding. That said,
no matter the sales price?
No matter the sales price. That said, it's going to be up to the closing agent, and the closing agents are normally represented by a closing attorney, and they're going to make a decision, and they have an underwriter who's doing the title work, and they're all going to make a decision, and they may just decide, hey, you know what, withhold or do a withholding certificate, get the IRS to tell us what to do. We're not taking the risk, because if once you've been burnt a few times for these numbers, you get smart pretty quick.
So what's the exception of that involves a certain sales price? I believe it's 300,000, or is it 350,000?
You have the exception. It's a $1 million line. Over $1 million, it's always 15%. On the $1 million line, you have 0 to 300,000. and then you have 300,000 to 1 million. You have those two partitions, so to speak. In the first partition, if the buyer will fill out an affidavit, swear out a buyer's occupancy affidavit that they will occupy 1/2 a year or 6 months within each of the first 2 years, that could be 2 months and then, a month, and well, in total, then they can, the seller, the withholding is 10%. So if it's under 300,000 excuse me, if it's under 300,000 and the buyer is an occupant of 6 months a year for each of the first 2 years, there's no FIRPTA withholding. So I misspoke just now. I said that there's no FIRPTA withholding. 0 to 300, if you can give a buyer's occupancy statement and you swear out and notarize that you will occupy within each of the first 2 years, half of a year, then there's no FIRPTA withholding. The title company doesn't withhold. You have to get and keep the affidavit, which you should do, and some background information. It's very nominally priced to do something to prove it. You put it in the file and you don't withhold. If you are not that primary occupancy type of individual, then from 0 to 300 and from 300 to 1 million, the withholding is 10%, not 15%. So if you're going to buy that property and you're going to occupy for 6 months of each of the first 2 years, the withholding up to 1 million, from 300 to 1 million, is 10% and not 15%. Otherwise, it's 15% from beginning all the way up.
So if it's under $1 million and the buyer is going to occupy the property, you said at least is 6 months out of 2 years or 3 years? I apologize.
6 months per year for each of the first 2 years. 6 months.
It's a buyer.
6 months. So you could technically sell it if you occupied 6 months, and then in that first year, and then you occupied the first 6 months, because that question comes up. Can I sell my property and meet the buyer occupancy in 18 months? Sometimes that's a question buyers and buyers realtors often ask. How long does my buyer have to have possession of that property before they can turn around and resell it?
Right. No, absolutely. And so then the certificate being, again, the almost risk tolerance level of the settlement agent, what are they willing to do in that scenario? Now, I think it's pretty clear with that exception that as long as it's a notarized affidavit signed on behalf of the buyer. Now, as far as visas.
Before you leave that topic, it better be very specific to the statutory requirements of information within that certificate. Pay somebody a couple of $100 to make sure that that thing's done right, and that all of the background information to prove it has been gathered and is in support of that. Don't just, believe somebody, because the title company has responsibility. They're not allowed to just believe what somebody tells them.
I believe the IRS Code mentions settlement agents' duty of withholding as representatives of the buyers, if I understand that correctly.
Absolutely. If you go to my website, since you're editing, and you'll see those very, very specific. It's called what is the obligation and risk of the settlement? It's called liabilities of buyers, sellers, and agents under the FIRPTA category. And it's very specific about there.
Let's talk about some visa scenarios. Are there countries that even if the person has a visa, that FIRPTA withholding must still take place?
There are certain treaties between countries that may say you are exempt. So certain countries and have treaties with the United States that exempt certain classes and certain And so you should always check the current treaties, and you should really never uh, never be giving any advice about what one treaty, you know, a treaty can change from 1 minute to the next. So you should always check treaties and treatises.
Well, and the thought being, why would, if a legal resident of the United States has to pay tax based on the particular financial scenario, I think it's safe to assume that you, a foreign national, would also have to pay, and that's ultimately what it's coming down to, is try to match what that gain really is, and that's what it's about.
You know, FIRPTA, that's a very good point, because FIRPTA really addresses, mostly speaking, if I was to say in general, individuals who are foreign sellers, because corporations and pensions and other large owners of properties, these people are not looking to, I want to say, cheat the IRS. You know, they're not looking to do that. They use big accounting firms. Everything's above board. They're open about their profits. They're open about their losses, and they're not trying to do anything to bring the power, prosecutorial power of the Internal Revenue Service down on them. It's more designed for the individual foreign sellers. And, you know, you would be surprised how often, almost on a daily basis, or certainly on a weekly basis, you get sellers that just, how can they get away with not having that withholding? That's not something we have ever bought into, ever.
When is it 15%? Because you mentioned 10, and now in 2015 it changed to the potential of 15%. When would 15% apply?
It's always 15%, unless the other few limited exceptions apply. If and in my website, you can go to FIRPTA, and under FIRPTA, the fourth one down says FIRPTA withholding exemptions. And so you have the buyers with the property sales under 300 or less, and they're going to be there 50% of the time within each of the first 2 years. You got the property where the buyer's property is between $300,000 and $1 up to and including $1 million, where the buyer's an individual who certifies to that occupancy of 50% or more of time in each of the 2 years following the closing. In that case, the withholding is 10%, and at all other times, it's 15%. Unless you have a green card. So you're a resident, right? If you're a green card, you're a resident, you're a card carrying resident for U.S. federal tax purposes. So if you're a lawful permanent resident of the United States, if you've been given that privilege according to the immigration laws, or residing permanently in the United States as an immigrant, and you generally have the status of a U.S. citizenship, and the Immigration Services, USCIS, issued you an alien registration card, right? The I-551, the green card. You have a green card, no FIRPTA.
I guess, yeah, and I can't help, because I'll be honest with you, Richard. I like North Carolina. A big reason why I like North Carolina is I can be a registered unaffiliated, right, from a political party perspective. But a lot of this is politics, I'm going to guess. I'm going to guess a lot of this has to do with politics. You mentioned that it was, and again, I don't want to dive into picking one side over another. Like I said, I vote the person, not the party. That's just my general rule on any issue. I go down individually per. I find it surprising with particular rhetoric that was used in 2008 through 2016, that under Obama's administration, that the potential 15% tax was increased. Do you have any thoughts on that by chance? I don't know if you're a political guy or not, but you tell me.
You know, I'm an American. I believe in the right to vote. Aside from that, I do not believe that any of this has to do with individual partisan party politics. This is an IRS, Internal Revenue Service, tax treasury, U.S. Treasury Department statutes, and and congressional in those terms, because what's happened was people were making money. People were making
Yeah.
money. And because they were making money, their withholding was insufficient. And because the party owing the tax was a foreign national, and the IRS doesn't go to any country to collect, a couple of 100,000 or whatever in taxes, they decided to hold more. And there were tremendous profits in real estate in those days prior to the mortgage crisis of 2008, let's say. There were just tremendous amounts, and people were uh, not withholding enough. If you're
Yeah.
not withholding enough from the IRS, they will order you to hold more. So if you're one of the millions of businessmen, let's say, or 1099 or individual contractors or whatever, who are uh, giving money to the IRS and paying their own share of taxes, that's the way it works. They'll withhold your exemptions. You go to work at a job. Oh, I have 10 exemptions. Well, in fact, if you start to owe more money to the IRS and you're over deducting on your exemptions, you will pay fines and penalties, and the IRS may step in and give you uh slap you around a little bit.
I would I would imagine they have that authority.
Oh, they are the ultimate authority. We gave the U.S. Treasury is the ultimate big boy, and in this case, they felt that, look, so many sales are occurring that we are having shortfalls in the withholding. So you're selling for $1 million and withholding 100,000, and you owe $140,000 in taxes, and they can't get the 40,000. So what they did was simply they said, we don't care what your color is, or what your race, or what your gender, or what your country is, or whatever. All we care about is that in general, it seems like profits in real estate have grown so much that the withholding of 10% is not sufficient to cover all transactions. They don't want to cover a certain percentage of transactions. They want it to be more than pretty much any case scenario.
Well, I think you bring up a good point of the misconception out there. The misconception is that this applies a lot to people from Mexico and South America, right? I think that's the general misconception. But the funny thing is your and my relationship started with a seller client who was from Canada. And that was where the withholding came from, was because they were a Canadian citizen and a non-legal resident of the United States. And so it's a very big misconception, I think, out there.
Uh, I'm not aware of the misconception, but in reality, the way it kind of works is that, if you're down along that southern border, or maybe you may be getting South America or Central America. If you're down here in Florida, let's say, you may be getting South Americans. They come here a lot, or Europeans come and they want to be in South, Orlando, this, that, and the other. You get Canadians are coming in, but you're getting a lot of foreigners that are coming in for Europe. I would say Asia is huge. So if Asia is investing in the West Coast, from Alaska, also in Canada, which is not FIRPTA, um, Washington, Oregon, California. You're getting all kinds of you're getting people that are coming to work on B1 visas, and they're going to, in Michigan. You have a lot of people from Asia, India. It's a it's not. I think it's unlike redlining, or the philosophy of where are a certain type of people coming. They're not asking those types of questions that they do on mortgage, for example, mortgage applications or real estate applications at the bottom. They're not running any type of that, at least at this point or up until this point, demographics about where are you coming from or what are you doing. You're just a taxpayer. And if you're a foreign national taxpayer, we're going to withhold that money from you, no matter whether it's real estate or whether it's investment income or whatever. And then we just want you to come to the IRS and file tax returns. That's all that they want them
Yeah.
to do. And they'll give them back all their money. They'll give them back all their money, but they're going to have to do it in such a way that not to make mistakes. But I'm going to tell you this about the IRS. You make mistakes, you go to these little places that make mistakes, they don't give you back your refund, even if you're a United States citizen. You've got to fix it all. Every I has got
That's
to be
right.
dotted. Every T has got to be crossed. Everything's has to be done exactly right. This is the Internal Revenue Service. So I often tell people it's not like dealing with a local real estate agency or a small somebody who fudges a little bit. I mean, they've got agents, they train them, everything systems, they compare everything. So yeah, if you've got a little mistake, oops, it wasn't an I, it was an L, they're going to kick that back to you because they want to make sure that everything's perfect. So it's just the same way. That's the way the Internal Revenue Service is.
What would you say is the best advice? Let's start with the real estate broker. Give them your best advice in general of entering that profession. And then I also, what is your take on the future related to FIRPTA? Those two points, sir.
Well, look, having been, by way of disclosure, and it's having been the owner of a very successful real estate company, residential and commercial, not just hundreds of millions of dollars. One of the hardest things that realtors do is prospect. And they're out there looking for clients, and they're out there both looking for listings, and they're out there looking for buyers. And you have the principal brokers and the managers who are required to educate these people. So you have ongoing in-house training, and you have training from the associations and whatever. So if you're in a specific market, let's say like an Asian ARREA, which is a very powerful, great people, by the way, all of them. I've met them all at the top. And you're dealing with Asian real estate, and you need to be an expert in FERPTA, because FERPTA is going to come into play in every single real estate transaction of a foreign national, and you can actually win clients over who have dealt with somebody who was not up to par. They don't want to have any more surprises. You're going after a foreign national. It's been my experience that realtors who just let these people know that they're expert in that area have won significant listings, because in a lot of cases, the foreign nationals own substantial properties. We're not talking $30,000 or a timeshare. And so being knowledgeable about FERPTA, you do so much prospecting, be knowledgeable about it. If you want to equate that to an attorney, it's, what goes into, what are the features of a contract? Be knowledgeable about that handful of, that 9 or whatever features that go into a written contract. Make sure that you know that they're supposed to, do this or that or the other. So it's very easy to lose business and to get your name trashed. It's very hard. Good news travels slowly, bad news travels quickly. So that's the case. The other thing is it is the responsibility of the principal brokers to make sure that their agents and broker associates who are dealing with foreign national sellers. Okay, so you have a very small uh, niche that they learn about this topic, and there should be a specialist in every office. Now, They're unable to do that. They're unwilling to do that, or whatever the case may be. So what they do is they go to a person like yourself with your title agency, and they have a foreign national, and they say, Justin, I'm bringing a foreign national to you. I have no idea what I'm supposed to do. Tell me, lead me. And so very often the closing agent, they're responsible. So as a closing agent, rather than fill those forms out improperly, which is a huge percentage of cases that are not done with a professional. I'm getting them all the time. I get them every week. They don't know how to write, the address of the property, residence. They put the title company in instead of the buyer. They put applying for in a case. They don't put a U.S. There's so many little tiny easy mistakes that they make, and so rather than pay somebody a few hundred, several $100s to do this properly, like you would an inspector, it's like inspecting the property yourself. What title agent is going to go and inspect the property and allow somebody to enter into it and close a transaction taking their advice as an inspector if they're not an inspector, or an appraiser, or anything else like that? This is an area that the fees are small enough, but the expertise is essential to avoid a crash. And that crash, by the way, when it happens, and it occurs very, very often, especially in these areas, is a long, painful crash that stimulates the unhappy foreign sellers screaming, kicking, and biting for months and months and months. Because when you mess up, it could take 2 years to straighten it out. So I say,
Ouch.
yeah, it's an ouch scenario. And then in many cases, when the foreign sellers find a lawyer, which, you got a lot of hungry lawyers out there. You got a lot of lawyers that will work on contingency. You got a lot of lawyers that are willing to take small cases on contingency. Oh, so yeah, I messed up. It's going to cost the foreign national $60,000. You know what? That 40% contingency, $25,000 to that lawyer. And then that foreign national has a friend who at their dinner parties and they're, with their wealthy friends and whatever that also may own, you're talking about, I get 16, 20, 20, 25 cases. And now all of a sudden it's a $500,000 worth of contingency, and they go after the title companies, and they go after the realtors and the principal brokers, and then it becomes a problem for the errors, the E&O and insurance companies. So this is such a simple, get your appraisal, get your inspection, get your FIRPTA case handled, go to a real title agency like yours. Don't go to some hunky, somebody who's going to do both those things for you.
What do you think the future looks like for FIRPTA?
FERPTA, if you think that the IRS is going to stop taxing capital gains on foreign nationals, that is, in my mind, never going to happen. The ground that they have given up, let's say with the PATH Act, to where pension funds don't have to pay FERPTA taxes, not a problem, because in order to be a pension investing in the United States, you're already doing all that tax work. You're already reporting your capital basis. I bought this then, I sold that then. That they're doing it with banks and commercial banks. They're already reporting that their earnings or whatever. FERPTA is never going to go away. FERPTA just got stronger in terms of a little bit more withholding. But the IRS did give a major concession that they had not done before. That is a tremendous benefit to foreign nationals, individuals, from beginning to end. Tremendous. And they did that with that PATH Act. While they raised it to 15%, they also empowered a certain class of specialty IRS approved certified acceptance agents like myself. I'm proud to be one of those, that group. And so it used to be the IRS, you were foreign national, you were selling something, you had to send your passport, your actual passport, with your documentation to the IRS. And so now you have to wait for the IRS to respond and send you back your passport. We get certified passport documentation. Hold on one second. Let me just reach behind me, and you know, we get certified passport documentation all the time from the Internal Revenue Service, because you have to send a certified copy and then they will send it back. But sometimes it takes them for a long time. So in 2015 with the PATH Act, they empowered these CAAs. You know, you have to pass tests, you have to pass all kinds of things and be certified and stay updated and be on the website and the IRS Gov. And now you're able to have that party, that foreign national, go to their country, to the issuing agency of the passport, or a U.S. embassy, for example, and they will apostille, they will notarize and certify a foreign passport. Now you can, and we do Zoom interviews like this, and we do certain authentication by the rules. And then now this foreign national, they just have to send the certified passport. They get to hold their original passport. That's huge. So that's a big, huge benefit given 7 years ago to foreign nationals. Maybe the government, in answer to your question, will ease up on proving who you are in order to apply for the refund. But if you're asking in terms of the amount of money do you give them to secure that you're going to report the tax, I don't see that happening.
Do you think the withholding amount goes up?
This is now a personal opinion. You're asking me for a personal opinion?
Yes.
My personal opinion is, if you take the overall picture of today, I see, and we're in a time where we have inflation, and this is not political in any way. And the open market money operations of the Federal Reserve Bank are keeping interest rates very, very, very low. You know, you can get 2% mortgages, and inflation is going up. What we're going to see is what we saw in the Reagan days, is going to be that interest rates may have to slowly climb up to fight this massive inflation that's begun to roll around now that COVID is the pandemic in I don't want to say it's passing medically, but you know, financially, and we're coming back to life. So what we probably, if you're asking me, my professional opinion, is going to see is slowly increasing rates over time, which means that real estate prices, and bond prices, which move inverse to the marketplace. So if interest rates move up, real estate prices start to move down a bit. And so that inflationary trend that we look like we're heading into will make it so that a 15%, which was created in 2015 when the inflationary process was on a reversing trend and much higher real estate profits were being made, and it was implemented during that time, in my mind, likely may not culminate in anything material. If you're asking me, will they reduce from 15% to 10%? If you look historically of tax rates, you see that, yes, you know, there have been lower rates and higher rates, but I'm not, I wouldn't bank on it.
So you think just kind of more so we stay where we're at until the time kind of we figure this out, almost of I don't want to. I'm with you. I don't want to say a post-pandemic world, but as financially people start getting back to the normal ebbs and flows, right? Because there's a lot of money being withheld by companies right now. They're not doing a bunch of their major projects because of the risk factor of spending that capital reserve they have. So what that will look like when we come out of this, I think will affect it. So I guess the short answer is it's anybody's guess. Is that right?
Well, look, you're on the cutting edge of your area of business, and obviously extremely knowledgeable. And so I would have to tend to agree with you in general. But foreign sellers, they are investors, and investors are well aware of the 1031 exchange statutes. And when you're an investor in a 1031 exchange situation, which we haven't discussed, it means that whatever it is you've got as your basis in a property, as long as it's handled by a qualified intermediary and you never touch the money, if because you have buy side, sell side. So if you're going to be buying a property and getting money, as long as that money goes to a qualified intermediary and you never touch it, or if you're going to sell first and then go out and buy, or buy first and sell first and you never touch the property deed or whatever, as long as you comply with those 1031 rules and you identify and you close on a property, you're not going to pay FIRPTA withholding. You're going to roll everything over. So in actuality, in a 1031 exchange situation, that FIRPTA is going to be retained by the qualified intermediary. If you're going to be the attorney, or the qualified intermediary gives you the money to hold in your escrow, you're going to hold it in your escrow. If that deal falls out of being qualified, at that point, you're going to now have to remit that to the IRS within 20 days.
You just opened the door to 1031s, so let me ask you, and you can give me your personal opinion on it. Do you think the 1031 provision goes away, like the potential conversation is moving toward? Do you think? Yeah.
First of all, I'm not a CPA. I have been a tax matters partner for billions of dollars for transactions. I was the tax sheltered real estate product manager for Merrill Lynch. I have transacted billions of dollars of commercial lending and commercial properties and packaging and syndications. And I'm a testifying expert in mortgage-backed securities, the purchases of bundles of mortgages, the purchases of bundles of properties. So I do have some qualifications. Now, you're asking me if the wash rules or tax-based benefits for rolling over, it would have to apply to 1031s, IRAs, KIOs, retirement plans. I believe, generally speaking, the government, the U.S. Treasury says, look, as long as you're not taking cash from that out and you're rolling those assets over without taking cash money out, we're going to let you do that. We will collect our capital gains taxes, because that's what you're rolling over, right? You're rolling over your long-term capital gains. But when you're collecting rents and you're paying taxes along the way. When you increase, I sold a property for $1 million. Now I'm going to get another property for $1.5 million because I made a property. Now you're collecting rents on $1.5 million. You're going to still pay those capital gains. You're just not going to pay them today. But you're going to pay taxes on the increased revenues that you're generating from the increased basis of your investments. And the same holds true for KIOs and IRAs and investment program and pension funds and all these people. So they're saying, look, we won't take the capital gains taxes now. We want you to roll these things over. We want you to make more money. We want you, if it's deferred, okay, we'll collect it then. Or if it's now, we'll collect it now. Because by doing so, they're just increasing their pie and their share of the pie. So I believe those things are not going to, the the powers that be that run the Federal Reserve chairman and the heads of Treasury and these great brains that rely on the CEOs and the CFOs of Goldman Sachs and the investment companies, et cetera, Morgan Stanley, to be fair, to mention others, they understand open market processes, and they understand how to increase the tax revenue. That's where it kind of gets a little bit into partisan politics on the form that they do it. So, whether you're, and so I don't want to really go over there, in terms of a higher tax or what we're doing now, but in terms of what we're talking about, I don't think that they're going to abolish the benefits of rolling over, whether it's FIRPTA
That's fair.
or whatever. I don't think they're going to abolish it because they're increasing their revenue from the bigger kitty.
Yeah. No, that's fair. No, I appreciate your time. I think that there's so much here that if you're willing, we're going to have to do a check-in with each other here in the next little bit, just to kind of go a little bit deeper, because I think that there's a lot of room for a lot of education, and particularly on FERPTA. And hey, if there's somebody that, let's get them on to talk about 1031s and how that can apply. And when we're talking about IRAs and we're talking about investment funds, because a lot of real estate are investment funds, right? That's a lot of the capital that's moving around within real estate. So, Richard, I appreciate your time. Again, I hope that you'd be willing to come back. FIRPTArefunds.com. That's the website to go to check out all of the great information that you have put out there for people and help simplify this as much as possible, because unfortunately it's pretty complicated unless you've got an expert like Richard who can break it down. So Richard, last and parting thoughts for people for today's episode.
It's like anything else. You don't have to be an expert in roofing, and you don't have to be an expert in sinkholes, and you don't have to be an expert in appraisals. If you're going to be a foreign national or involve a foreign national in a transaction, go to a title company who understands foreign nationals. And if the title company, just get yourself an expert, get some expert advice. Don't buy a house without getting an inspection. Don't get a mortgage without getting an appraisal. And don't close a foreign national seller real estate transaction without getting the services of a FIRPTA professional. That said, it's a niche because it's not really a whole lot of profit in there. So a lot of accountants don't want to mess with it. It's too complicated and the money's just not great. But if you have a company that specializes in it and you're able to go there, go there.
Well, Richard, we're going to send them your way for as long as you're willing. So I hope that's okay. And I don't take responsibility if any crazies call you that claim they saw this. I'm just gonna chalk that up to SEO and Google on that one. But I appreciate your time. Yes, sir.
I get, I don't know, 4, 5, 6 inquiries a day from, I don't know where they come from. So somebody's out there, people are out there, and a lot of people, what they are trying to do is, and I really know the countries. It's sort of, I don't want to mention it because but they call up, they want to milk you, get all the information they can, and then they want to do it themselves. And then they come back 6 or 8 months later on what a mess there is in their life that they finally want to pay. And now it's a difficult case resolution, and it costs a lot more money in upfront cash and contingencies to fix that problem. But there are people, and what they're trying to do is they're just trying to learn how it is you paint your car. How do you sand it? what paint do you buy? And then they're going to go try and paint their car. The problem is when it rains and they're driving their car and the paint starts peeling off or whatever, and they need help. Well, of course, it's more, that's the way it is.
Justin Kazepis, todaysrealtalk.com, FIRPTArefunds.com. Thank you so much, Richard, for your time. We really appreciate it and hope to see you again soon.
Justin, thank you so much. I have to say that you deserve a lot of respect and recognition for identifying such a critical and important subject to so many hundreds of thousands of foreign nationals and the realtors that interact, buy and sell, and the buyers themselves each year in the United States. So I applaud you and your efforts. And for that reason, you can count on me to step up and answer your call if and when it comes again. I appreciate the opportunity to serve.
Thank you, sir. Thank you, sir. All right.